This is the CLT Trader. Welcome to my channel. If you are new in this channel, do well to subscribe, like and share. The topic of today will be on market structure. So today we'll be seeing how we can mark our structure in the right way. High probability structure. So we can use it to capitalize, right? To look for our entry opportunity. Alright, so let's start. We have the redirection of the market. We have the uptrend, right? We have the uptrend. We have the uptrend. This is an uptrend, right? This is an uptrend. This is a downtrend. Lower highs and lower low. And we have a ranging market. This is a ranging market. So that is a ranging market. We have a bullish market, we have a bearish market, and we have a ranging market. But I would like to inform you that if this is how you are identifying your structure, know that you are identifying your structure in the wrong way. This is not how to mark a structure. This is not how to mark a structure. This is a wrong market structure. Market can never move like this. This is not how market move. I will show you in this video. I'll be showing you how the market move, right? Let's start. Okay, I'll be showing you how the market move. This is how the market move. This is the uptrend, right? This is the uptrend. This is how the market move, right? This is how the market move. This is the right market structure. You have to understand that liquidity is a fuel in the market. Liquidity is like a fuel in the market. Like when you are driving your car, you pass in the fuel station and fuel your car, right? And fuel your car in order to drive safely, in order for your car to move. If there is no fuel, your car will not move. It's same like a market. Liquidity is like a fuel in the market. If there is no liquidity, price will not move. So this low is like a liquidity. You see this low, this low is a liquidity. So we have to take liquidity from this low and break a structure before we can move, right? If we fail to take liquidity, price will not be able to move. So this is a liquidity sweep, right? And this is a break of structure. This is a break of structure to the upside. So this low will be considered like a strong low. This will be a strong low. This is a protected low, right? This is a protected low. And this, you see another break of structure here. What is a low that caused this break of structure? This is the low responsible for this break of structure. This is the low here. But this low is not a strong low because it failed to take out liquidity. And this low will be acting as an inducement in the market, like a fuel, like a liquidity, right? You can name it. So this is a liquidity in the market. You need to know how to identify liquidity. That is a liquidity. This is also a liquidity. That is a fuel. So you need to know how to identify them. So now we have a sweep below that low and we have a break of structure. Leaving behind this strong low. This one now will be considered as a strong low. This is a second strong low, right? This is second strong low. But this is the main low here. This guy is the main low. This guy. And all these structures, these are smaller structures that are happening inside of this main structure. This is the main structure. This is the main low, right? This is the main low of the market. So this is the second low that we have, the strong low. And excuse me. And we have another break to the upside. So this is a strong low. This is a break of structure to the upside. And price will continue like that. Price will continue to move to the upside. And once price will continue to move like this, it will create multiple strong low. And later on, price will reverse and start giving you market structure shift. And it will start to sweep liquidity from the upside and break structure to the downside. That's when you will know that market have changed the direction. But that will be an internal market structure shift unless you see a break below this low before you can consider that this is a long-term sell. That will be a short-term sell. I don't know if you understand. So this is the right way to mark your structure. Okay, let's go on the chart so we can make a live example from there. Let me take you guys on the chart so we can give an example, a good example on the chart. All right. So this is GBP USD on the 4-hour time frame. This is GBP USD on the 4-hour time frame. Okay, let's start with the bearish market. As you can see, price is dropping to the downside from here. From this high, you can see a drop. So let's start with that move, right? All right. So this high, we have a sweep of liquidity on this high, right? And we have a market structure shift. This is our market structure shift on this low. So that's a good example. We have a sweep of liquidity and a change of character. So this guy should be our strong high. This is a strong high. We have to mark it. This is the first strong high that we have. That means if you have a break with a body above that high, that is a complete change of character to the upside. So we have this first strong high. Let's continue to identify them. Okay, we have that first one. And secondly, we have this one. This is a high, and we have a liquidity sweep on this high. So this is another strong high. We have a liquidity sweep and a break of structure to the downside. We have this break of structure. So this is the second strong high that we have in the market. This is the second strong high, right? Price continues to drop. Once you have a liquidity sweep and a break of structure, you should wait for a pullback and look for your sell opportunity. That's how to do it. Like this one, like this first one. Once we took out the liquidity on this high and have a break of structure on this low, this was the first pullback, this guy. There was a first pullback here. This was the first pullback, this guy. And later on, price took liquidity on this high and it is dropping to the downside, right? That was the first pullback. We took our liquidity and we continued to drop. So this is the second strong high. This is the second strong high that we have, right? This is second strong high. So let's continue to mark it. We have a break of structure here, but there was no liquidity sweep, so we should not consider this one as a strong high. I'm talking about this break of structure to the downside. There was no liquidity sweep on the high, so that is not a strong high. So price is dropping to the downside, and later on there is a retracement. We have this retracement. We have this minor change of character on this low. We have this minor change of character on this low. I'm talking about this guy. We have this minor change of character and price is pushing to the upside. We have this push to the upside. You have this push to the upside. Everything happening in this range is internal range, right? is internal structure. These are all internal structures. This is the main structure here, right? So we should be looking for a sell opportunity, long-term sell opportunity. So once price is coming back to the upside, you just need to mark your zone and wait for a liquidity sweep and a break of structure and take your sell opportunity. So we have this high. Price came back to this high. Price came back to this high and took out liquidity from that high. This is a sweep of liquidity from that strong high. So that is another, I think there is a, we took out liquidity from that high and we start to drop to the downside, right? We took out liquidity and this is a market structure shift from here. That's the market structure shift. So we also have this range. Now we have this protected high. This another strong high. We have this strong high as well. So now we have this 1, 2, 3. We have 3 strong highs, right? So we are still pushing to the downside. So now we are trading now within this range. We have now this range. This is our new range. We have this low and we have this high. So we want to look for sell opportunity within this range. This was a key level. You see what happened after price took liquidity from that key level. You can see a push to the downside. That's where you can look for your sell opportunity. You can see a drop to the downside. Okay, let's continue. So this another liquidity sweep on this high, and this is a break of structure to the downside. So this is another strong high. We have the 4th strong high. This is another strong high. So we have 1, 2, 3, 4. We have 4 strong highs. Okay, you have to understand that once you have multiple strong highs, right, there will be time that price will violate them. There will be time that price will use all those strong highs as a liquidity to continue to drop to the downside. Your main aim is that price should not break below this first high, because that is your all-time high. That is where you start. So your main aim is that price should not break above this high. If price break above this high, that is a complete change of character, right? Everything happening within this range is an internal structure. It's an internal structure. That is where you have to be looking for short-term buy or short-term sell. So now we have this market structure shift from here. This strong high was violated. You see a break with a body above the strong high, right? That is a break with a body. After that, we have a liquidity sweep. We have a liquidity sweep and a break of structure to the upside. So this is our strong low. Now we have strong low instead of strong high. You have this strong low. You have this strong low. So after the creation of that strong low, we have a push to the upside. We have this push to the upside. After the creation of this strong low, we have this push to the upside. We have this push to the upside, right? So price is coming out to take out this liquidity. So all these strong highs that you are seeing, once price have created multiple strong highs, at the end price will use all those strong highs as a liquidity to continue to the main direction, right? After that, price will use all those strong highs as a liquidity to continue to drop to the downside. So once price have formed a multiple strong highs, know that sooner or later price will come back and use it as a liquidity, because price know that there are multiple liquidity line above the strong highs. So price have to take it and continue to drop. But while taking the strong highs, this one should be protected. This one should still be protected. This primary strong high, this one should be protected, because if you have a break with a body above that strong high, that is a complete change of character. So everything happening within this range is a minor structure, right? It's an internal structure happening within the main structure. That is the main structure, right? Okay, so now we have this sweep of liquidity on this high. We have this liquidity sweep. Price have taken out all the strong highs, all the minor strong highs, right? All the minor strong highs were taken. We have only this one left because this is the primary strong high. This is our all-time high, right? We consider this guy as the all-time high, the main structure, the main high. So all these one are internal, right? So price have taken all these internal structures, They have taken liquidity from all the structures. And what happened after that? What happened after that? We have a sweep of liquidity. We have a sweep of liquidity on this high, and we have a change of character to the downside. You have this change of character to the downside. You have this change of character. So now this is a new strong high that we have. This is a formation of a new strong high. After price have taken out all the liquidity from the internal structures, this is a new strong high that we have, right? So this is a beginning of a new trend, This is a beginning of a new trend. So we have this strong high and we have this change of character. So we are dropping to the downside. I need to delete all this. These are useless for now. We will not use them again. Okay. So now this is a new trend. So this is our break of structure to the downside. Let's continue to mark them. Let's continue to mark. We are looking for a liquidity sweep and a break of structure to the downside. So these are all internal structures. Okay, now we have this liquidity sweep as well. We have this second one. This is a new structure, guys. We have this liquidity sweep. Let's see if we have a break of structure after that. We have that liquidity sweep and this break of structure to the downside. No, that's not the origin of that break of structure. This is the origin instead. So we have this guy. No, this is not a liquidity sweep. So we continue to drop. This is just an inducement. We consider this zone as an inducement. So we are dropping to the downside, right? We continue to drop to the downside. We have this guy. We have this liquidity sweep. You have this guy. You have this liquidity sweep and this break of structure to the downside. And this break of structure. You have liquidity sweep and a break of structure from there. Okay, so now at the end, we have a change in the state of delivery from this zone. From this zone, you can see a failure swing. We have a failure swing from this zone. And this is a liquidity sweep and a break of structure to the upside, right? So this guy was supposed to be a strong low. This guy. But price have break below that low. So now, this is our main liquidity sweep now. The trend have changed from here. This is a liquidity sweep from here. And this is a change of character to the upside. That's a liquidity sweep and a change of character. So now we have this strong low. This is our strong low. We have this first strong low. So now we are in the creation of strong lows instead of strong high. So now we have this low, we have this liquidity sweep on this low, and we also have this break of structure to the upside. So this is our second strong low. We have also this strong low, but this is the main low. So we have also this strong low. This is a strong low as well. So now we are pushing to the upside, right? We are pushing to the upside. This is also a strong low. We have a liquidity sweep on this low. We have a liquidity sweep on this low, and we have a break of structure to the upside. You have this break of structure. So this is another strong low. All of these things are internal range, right? They are internal range. So that's how you can mark your range and capitalize on it. So this is a strong low as well. As you can see, we have a pullback into that range. We have a correction phase into that range, and price continues to push to the upside. So this is another strong low, right? This is another strong low, and we are pushing to the upside. There was no liquidity sweep here. Okay, so now this is where the trend started to reverse, right? This is where the trend started to reverse again. We have this liquidity sweep. Was there a break of structure? Yes. This is the current price action. We have this break of structure to the downside. So this is our strong high. Now we have started creating strong high instead of strong lows. So this is the strong high that we have, right? This is our strong high, and this is our break of structure. And we also have this liquidity sweep. We have this liquidity sweep on this high, and we have this break of structure to the downside. So that's the second strong high. We have this second strong high. We have this second strong high. So this is the current price action. This is the current price action. This is our current price action. So we need to keep on looking for sell opportunity. We need to keep looking for sell opportunity on GBP USD on the 4-hour. So this is the current price action. Price is dropping to the downside. So you see all this uptrend, all these strong lows that were pushing to the upside. This was just a correction phase, but we have to put in mind that this is still our main high. You see that first all-time high, this first all-time high, this was the all-time high that we have. And after that, price create multiple internal structures, and after that, price came and cleared the liquidity on those internal structures and give us a second strong high, right? This was the second strong high. This was the second one. This was the second strong high. After that, price created multiple internal structures. All these are internal structures. All these, as you can see, all of them are internal structures. All of these, they are all internal structures. All of these, they are all internal structures. This is the main structure from here. And this one, that's the main structure. So everything is happening within these structures. Everything is happening within this structure. This is the main structure. This is the main high. If you see a break above that high, that is a complete long-term change of character. All of these things happening here, they are internal structures. They are internal structures. So you need to understand how to mark the right structure and follow it. I need to understand the difference between the main structures and internal structure. So once you see a change of character, it's not like it's a long-term change of character. You have to look the bigger picture. You have to look for a bigger picture and understand what is happening inside of the bigger picture. So let's take, for instance, we have this drop to the downside from here. We have this drop to the downside. Let me use this line. From here, we have this high. This is our high and this is our low. So this is the high and this is the low. If you use your Fibonacci, you will see what have happened there. This was a downtrend, right? This was a downtrend. We have from the high to the low. What can you see? Price have tapped into the 78.6%. That is a premium, a golden zone, where you can look for your good sell opportunity. That's where we have our retracement. So you see, this is a new retracement that is forming inside of this trend. This was a downtrend. This was a clean downtrend. We have this high. This is the first high. This is the first high. This is the first high. Price form some internal structures, and after that, price push back and collect all those internal structures and drop again to the downside. This is the main high, and this is the low. This is the low of that structure. All this move is a correction phase, as you can see. All this move, this is all a correction phase. That's a correction phase. Price have tapped into the 78.6%, and you can see we have already a change of character from there. After price tap into the 78.6%, what can you see? This is a change of character. This is a formation of a new range. This is a formation of a new range. We have a sweep of liquidity and we have a break of structure. That is a formation of a new range to the downside. We have another liquidity sweep and we have a break of structure also. So this is the beginning of the new range, which is the downtrend. This is the beginning of the new structure, which is a bearish trend. So that's how to read your market structure in the good way, that you will not fall in the trap of liquidity. You will not be a liquidity in the market. That is how to mark a liquidity in the market. This is the right way to identify a good market structure. If you cannot do this, you always fall in the trap of liquidity. So guys, listen to this video and understand it. Take a good look at it and understand what I'm explaining, and make sure you go and backtest on the chart. Make sure you backtest on the chart and understand it better. If you understand this, you will always be on the safe side. You'll always be on the safe side. Trust me. So I think this will be the end of the video, guys. I will see you guys on the next one. This is the CRT Trader. Peace out.